three very big crises we have seen and two mini crises over the last 25 years. So say Dotcom, if you take, it was very high valuations, but there was no liquidity issue. The market just sat down on its own weight. Then you look at 2008, there was a massive subprime issue, and then there was a liquidity issue for large banks. So that was actually a sheer liquidity issue, and a lot of note printing had to happen. Come to 2013, the taper tantrum, markets were fragile. US withdrawing some amount of, tapering some of its stimulus shouldn't have caused the kind of crash it did, but it was very short lived. Again, at moment they reversed it, it came back. Same way Trump tariff one in 2018-19 when China depreciated its currency by 10%, all emerging markets started selling off, US started selling off, and Janet Yellen had to come running. Siddharth, you will remember that from QT they went to QE overnight. Overnight
Yes.
she went to
Overnight
easy.
shift.
So this time around, and then the last one is the pandemic where the economies just shut down. So there, the biggest stimulus in history was provided. India was very smart again in terms of that stimulus. So we don't have that excess which is being seen, say, in the US markets based on that stimulus. Where are we today in comparison to all this? Is there a liquidity issue? No. Will there be a slowdown in global economic growth? Yes. On 105, $110 trillion of global GDP, Siddharth, about $1.5 trillion is the expectation of a slowdown. 1.5 trillion. So less than 1% of a global drag. Third, is there ammunition with the central banks? Yes. Fed is not sitting at 0% today that it will have to go to negative rates. It was sitting at 5.25. It has cut 1%. It can easily cut 2 more percent. Markets are now discounting 1.25% of cuts by the Fed within this year. I think markets are over exuberant, but at least three cuts. So maybe 75 basis points the Fed can cut. The European Union is showing 88 basis points of cut. So say 75 from European Union. Bank of England has some amount. Japan, anyways, is a stimulated economy. Still, they have raised rates once. They can go back to negative. So, is there ammunition with central banks? Yes. Will it be needed? Doesn't look like.